Hello everyone, welcome to MyOnlineEdu.com's video tutorial. Today's tutorial is about learning the candlestick patterns for stock trading or forex trading or commodity trading. This guide is for beginners and this video should be used as a training and learning purpose. You should not do the actual trade based on the learning that I am showing you today. So to start with, I have opened a chart. You can use any chart software like investing.com or TradingView or any other third-party software that you are used to. So here I am using the Zerodha's inbuilt TradingView chart, and if you are a Zerodha customer, you can check the URL given in the description of this video on how to use the TradingView chart on Zerodha Kite platform. Anyway, let's move on to our actual topic, that is the candlestick patterns. So before understanding the patterns, we must first understand what a candlestick is. So a candlestick, as you can see here, so each and every stick represents a candle. Okay, and this candlestick patterns tells me lots of things. So what are those things we'll learn today? So what are the other chart type that you can have is like you can have the line type. So if you use the line type, so line type is nothing but it's based on the closing price for that stock. So here I am using the Indian stock Reliance. You can actually connect this training to any stock. It can be any foreign stock, or it can be any commodity trading, or it can be any forex trading. So here one of the stock, that is the Reliance company in India market, is actually I'm getting a line chart like this. But this only it is useful to determine the trend. For an example, from here to here I can see it's a very nice uptrend. The stock has moved from this to this. So almost from 895 to almost 2174. It's a huge bullish move. But but the candlestick, it tells me lots of things other than the line chart. So what does a single candle stick actually represents? Let's go ahead and let's learn that. So you must have seen a candle, right? So a candle normally has a body, and in the upper side there is a wick, and also in the lower side there is a wick. So normally, when a particular stock on a particular day, it normally has four things. Normally has, that is called OHLC. So O is for open, means on the starting of the day at what price the stock opens. Then high means that the price reached the maximum for that particular day or for that particular time frame. Low means the price went below the maximum price gone down. So that is called the low of that day or that time frame. And close is finally the price closes, right? So these are the normal four activities that a stock has in a particular day or a time frame. I'll talk about the time frame later. Let's stick to a day time frame. So this OHLC is very much important, and a particular candlestick represents this OHLC day, data of a stock. So remember, in the line chart, it's always based on the closing price. So there we don't get the open price, the high price, or the low price. It's always the closing price of that day. But in candlestick, actually we capture all these four activities: the open, high, low, and close. So that is very important to determine many things. So we'll come one by one later on. So let's say, so this is how a candle looks like. So normally this is called the candle body. So either a candle color can be green or red. Some people use white and black. So white is for a green candle, which is also called a bullish candle. Bullish means that there are some buyers, more buyers than the sellers. And red candle or the black candle is used as a bearish candle. Bearish means that here on that particular day there are more sellers than the buyers. So as you know that bulls and bears, right, we know this terminology in trading. So normally what happens, every day that when the stock market is open, so there is a fight going on between the bulls and the bears, right? And based on that fight, some outcomes are there. Sometimes the bears win, so at that time we say that this is the bearish things. Sometimes the bulls wins, so at that time we say that this is the bullish thing. And always remember that bulls are no ones that who wants to buy that stock, and bears are those one who wants to sell that stock. So every day, every seconds, there are some fight going on, and sometimes what happens that nobody wins. Okay, so let's stick to that this fight, just imagine this fight, that there's a fight going on between the bulls and the bears. Fine. Okay, so now as you can see that this is the candle body. Similarly, this is a candle body, but this candle is a green candle, so it's a bullish candle. This candle is a red candle, so it's a bearish candle. And on a candle, on top of the candle, there is a straight line, little bit of straight line, right? So this is called the upper shadow, and some people refer it as a wig also. So I'll refer here as a shadow. Okay, so this is called the upper shadow, this is called the lower shadow. Similarly, a candle can have, a red candle can have the upper shadow as well as the lower shadow. Now remember, so neither of this shadow or body, the upper shadow or the lower shadow or the body, is mandatory to be there in the candle. I'll tell you, I'll show you. So it's not mandatory to be a candle, but if it is there, so we'll consider that as the upper shadow. If it is there, it will consider that as the body of the candle, and if there is some lower shadow, we'll consider that as a lower shadow. Now, how this OHLC translates into a candle? So for a bullish candle, you can see this particular portion is called the open. This particular portion marks as open. So let's say the stock open price is 100. So on a particular day, a stock opens at price 100. Now it can happen that it goes down to 95. That is the low. So this is the low. So this is the lower shadow. So low represents the lowest price for that particular day. And then what happens, the price start moving up, it's moving up. Okay, and it reaches 110. So that is the highest price that it has. And then finally at the end of the day, the price comes down and settles to, let's say, closing price at 105. So this point is your closing price. Similarly, on a bearish candle, what happens, the upper half of the body is called the open. So the difference between the bullish and the bearish is the open and close. Rest, high and low are same, as you can see. So this is the high, this is the high, this is the low, this is the low. But here open is starting from here, the lower part of the body, but here the open is starting from the higher part of the body. So what happens here is the price opened at 100, and then at the price 100, and then it started moving up and it went to 105. That is the high of the day. And then it started falling, and then it moves to 90. That is the lowest price of the day. So this is the low. So and then finally at the end of the day, when the trading stops, it settles down at price 95. So this is the closing price. So I hope this elaborates how the OHLC translates into a candlestick pattern. So just pause the video for a moment and think about these terminologies and basically go through a candle body. So if it is a bullish candle, the opens, high, close and low. And then this is the, if this is a bearish candle, so this is the open and this is the high, this is the low and this is the close. Now coming to the time frame part, okay, so this is very much important. So I'll tell you, normally there are many time frames. You can see a chart like the daily time frame, weekly time frame, monthly time frame, and also some shorter time frames like the hourly, 30 minutes, 15 minutes, 5 minutes, 1 minute also. So what does it do is here, you can see that this is a day, time frame. So what this particular candle, all this candle represents the data of a day. And you can see here, right, this OHLC data is also available. So you take the cursor to a particular candle and this OHLC data is getting changed, and so this OHLC data represents where the cursor is. So let's take an example of this candle. So let's focus on this particular candle. If I take the mouse over here, you see the you just give your focus here, okay, over this area. So the opening price is 2020. So on that day, the Reliance opened at 2020.60 and high is 2167. So that is the maximum price it reached on that day, because we are looking this in a day time frame. And then again it went to priced 2000.25. So that is the lowest value on that day it reached, and then it closed finally at 2150.60. So on the it shows, tells me the activity on that day. So because my time frame is day, so now if I move to a weekly time frame, what happens? You see the candlestick changes. So now each candlestick represents a week data. Okay, so starting from Monday to Friday. So for an example, if you check this candle, okay, so this is the Monday data to Friday data. Okay, so the Monday, now you check here the OHLC data. So it says that Monday it opened on 1917.80 and it reached high as 2163. So this can be any this can be any day in that week. And then the low is 1899.65. So in that week it falls to this particular level, that is 1899.65. And finally on Friday, just before the the when the market closed, it closed at 2146.15. So this is how the candlestick represents based on a time frame. You can change it to hourly. Okay, so in a 1 hour chart, so it basically represents a 1 hour chart. As you can see here, just below, so this is the 2nd September data from 11:15. So this candlestick now represents a 1 hour data. So from 11:15 to 12:15. So 11:15 it opened on 2166.75. It moves to high at 2138, then comes down to low at 2113.25, and finally settles on the closing price is 2134. So as you can see, it's very interesting to see that based on your time frame the candlestick changes. And of course that will be because a candlestick represents that particular time frame. If it is a day time frame, so it represents a day's data. If it is a weekly time frame, so it represents a whole week's data. If it is an hourly time frame, it just represents the OHLC of that particular hour. Now I am making this to 1 day. Now as you have understood the time frame and the relation between the candlesticks, now let's move on to our topic, that is the candlestick pattern. Okay, now we'll learn the candlestick pattern. So why these candlestick patterns are important? So these candlestick patterns are important because this helps us to predict. Remember, predict. Okay, it's not certain, it help us to predict, because nobody is certain that what the price will be, but it actually helps us to predict where the price can go. It can be so for an example, if the price is falling down, so that we say that it's a downtrend. And when the price is going up every day, so we can say that it's a uptrend, right? So but there will be some end. For an example, you see here, let me tell you. So see, this price started from falling from here to here, right? And suddenly, from here the price started moving up. So the downtrend now becomes an uptrend. So it's called a trend reversal. So now how we can determine that there is going to be a change in trend, there is going to be a trend reversal. So this particular candlestick patterns helps us to determine that. So it's only the prediction. Again, I am telling you, it's no certain. Okay. So the first one is the Marubozu. Marubozu is a Japanese word, is for bald. Okay, so some person who doesn't have any hair, it's called bald, right? So Marubozu is something like that. So the pattern of the candlestick looks like this. Okay, so as you can see here, it's a long body, but there is no shadow, upper shadow or no lower shadow. So sometimes it may happen that there is very little shadow, very little. Remember, it's very little that you need to adjust. So very little shadow may appear, but that also can be considered as a Marubozu. So what does a Marubozu says? Let's take a look. Let's understand the underlying psychology. What happens between the bears and the bulls? Okay. And now remember the fights that I have told you. Correct. So now what happens between them, the bears and the bulls, the buyers and the sellers? So now, as you know that this is our opening price, correct? And the here price, since the price opened, it did not go down. It's keep moving up, moving up, moving up, moving up, and finally it closes at the highest price. So here you can see our low and the open is almost same, and the high and the close is almost same. Similarly, on the red candle, on the bearish, the same thing happens. The price opens here and it keeps down and keeps down and keeps down. So what is the psychology behind this candlestick? You see the price going up, and buyers are jumping in to buy at the higher price. You see the demand of the stock is very, very high because the price is going up and still the buyers are jumping in into this higher price. So something is very good about this stock. Something is very good is happening. Similarly, in the bearish Marubozu, what happens is the price is going down and still sellers are selling it. That's why the price is keep continuing going down, because the sellers at the lower level is also selling. So means it's a selling pressure, a huge selling pressure is there, right? So this candles represents either a huge buying pressure or a huge selling pressure. Okay. So now don't look this candlestick pattern into isolation. Always look for the prior trend. Okay. So for an example, I'll tell you that if a bullish Marubozu appears after a downtrend, so it can be a good signal. You can predict that the price of the stock now may go up. And similarly, a bearish Marubozu, if it appears after a nice uptrend, then you can predict that now it's time that maybe the price can go down. So always look for the prior trend. So bullish Marubozu after a downtrend and bearish Marubozu after an uptrend is important. So now let's take a look. So I've just put the dates. So Reliance 12 June 2020. So now you look at this example of Reliance on 20th January 2020. See, as I told you, you need to look for the prior trend. So prior trend is uptrend. From here, the price start moving up, 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 and up, right? So the price is moving up. So it's a prior trend is uptrend. So now suddenly a bearish Marubozu appeared here. But you see here, there is a very little lower shadow, but we can ignore because this is very little, right? So we can ignore. So this particular candle, you know, gives us a warning that now this uptrend may be going to end, and maybe a downtrend in going to start, and that is what has happened. You see here, that is what has happened, correct? So that after this candle, you see the price falls down and again tries to move up, and but finally it falls down. So this Marubozu, gives us warning that we can get out from this stock depending on our investment horizon. Okay, another example on 20th April 2016. So you see the price was moving up, and suddenly a bearish Marubozu appeared. Okay, so then the price again start falling down. It's coming down, right? So it's we can, so this represents the reversal of the bullish trend and start of a new reversal trend, that is the bearish here, because this is a bearish Marubozu. Okay, now this is the stock of SEC on 21st Feb 2014. We can see that there is a bullish Marubozu, right? But you see that what is the prior trend? The prior trend is the price falling down, correct? So though there is a little upper shadow and little lower shadow, but we can ignore that, and because they are very small. So after the appearance of this bullish Marubozu, what happens? The price started moving up. You see, so always you need to take this candlestick pattern in context with the prior trend. Remember that.